Good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 being recorded on Saturday, April the 6th, 2024. I'm going to start with the cash market, the SPX, and just to update again what I did for the futures market last Thursday. So it was posted on Thursday, was that I am still going to be looking at the market as having completed the primary B wave rally, the counter trend rally, and that would be at, excuse me, the highs that we saw at, I just need to open this up just a little bit, folks, so I can get in there and take a look and see what that high actually was. At the high on at 5266.45. So with that high being in place, I am considering that the market did complete the primary B wave. So in other words, what we completed was the minute fifth wave, the minor fifth wave, intermediate wave C, and primary wave B, and that we are starting a primary C wave down in the very, very, very initial stages thereof. So just to quickly recap what's going to be inside that primary C wave down. It will consist of 5 waves of intermediate degree. So that would place us in the beginning, we're in the first wave of intermediate degree down. What's inside intermediate wave 1? 5 waves of minor degree. They'll also be labeled 1, 2, 3, 4, 5. So what's going to be inside minor wave 1? 5 waves of minute degree, and so forth and so on. So where am I beginning? I'm going to bring this straight down. We're going to go to look at that 4-hour chart. And we can again see 1, 2, 3, 4. The 5 is in place. I'm just going to open it up so we can look at that 5. And then we have minute 1, minute 2, 3, 4, and 5. So what we've done is minuet wave 1 of minute wave 1 coming down. Minuet wave 2, sub-minuet wave 1, sub-minuet wave 2. So if I'm putting this as the completion point, and there they all are, sitting up above there, then we're beginning, and we're forming minute wave 1, which will consist of 5 waves of minuet degree. And that's going to be our first 5 down, at least on a 4-hour chart. So I have 1, 2, 1, 2. Here is Thursday's big 2% move. And there were several reasons as to why that took place. One being 0 DTE options, and as it is reflective against a narrative that was actually being put out that the Fed governors and presidents that were out speaking continued to suggest that they've gone even further, that some, I guess, were saying that we may not see an interest rate cut at all in 2024. Now, this has gone from originally that it was going to start in March. Then that got pushed out. Then it was June. Then it got pushed out that we started hearing fourth quarter of 2024. And all that kind of produced a little bit of a downslide midweek. Then it changed again. Then they started to come out and say, well, we maybe not getting it at all. Might be December, maybe not at all in 2024. And that combined with options that were expiring on that Thursday. Remind you that this started from a pretty decent high. It started right off of these were the intraday highs at about 52.56 basis the cash. And so we got a little bit higher just previous bar, but then pretty much right about 1 o'clock Eastern, something came out, something got hit, and they started to sell it. And as I talked about on Thursday, you were really hard pressed to look inside these bars all the way down. I mean, it took it from a 4-hour to a 1-hour to a 15-minute, and where you could not see where the market was actually bouncing. But we were getting like a 1, 2, 3, 4, 5. So in other words, we'd see the 2 because the bar would have been green. We saw 4 because the bar would have been green. We didn't see that. There wasn't. It was just straight, pretty much progressively down, and very, not necessarily violent, but it was consistent. So that's where you started to get a lot of the talk about, well, we had the gamma flow. And so a lot of that came into play. And I don't doubt that some of that was due to position adjustments in advance of Thursday's expiration, and some possibly of what Friday's expiration would be. And don't forget that we had Thursday, but then we had Friday, which had its weekly expiration plus the daily expiration. So there was a lot of just positioning going on within that. Plus, the basically within the markets lately, we've had what you might want to call volatility suppression. The volatility just really isn't moving. And so it's almost been taken as like, well, the market is being very complacent, that we're looking for, we're just continuing, everything should just be fine. And that's basically when we're getting the volatility is kind of being suppressed and not expanding and reacting to the news or other things, then they start to think, well, that's being suppressed. And that might be the case. And there's a whole reason that's going to go behind it, because volatility is being used pretty heavily on how larger firms and trading firms and traders are positioning themselves by using volatility. So they're selling volatility, they're doing different positions, which don't necessarily give likely maybe the correct version of what volatility is supposed to be representing, but we are seeing it follow through in terms of how we're measuring premium within the and within options. So we get the volatility there. So you got implied, you got historical, all kinds of measurements. And there's actually, and I'm going to include the link, and it'll be within the notes for this particular posting. And it was put out by Spot Gamma, and Brent, who is, I believe, the CEO, or just he's the head tech guy there, put out a really good video with a lot of explanation about gamma volatility, how they are intertwined, how these moves happened, and puts a lot of historical data, a ton of data goes along with it. Now, it's very, very technical. And if you have trouble, please go back and watch it again, and watch it a third time if necessary, because the information that he's talking about really does relate to how do we want to interpret what happened and what could then happen further, right? So in other words, if we got the suppression, what could possibly just bust open that suppression of volatility and it just explodes? And so this is one point where he and I both actually agree. And I'm not going to say that I'm on the same level of understanding. This is the guy who does a lot of this gamma work, and it is pretty stellar in my view. But in that the geopolitical situations that are brewing, forming, continue to be the thorn in the side of the market are still in play. And that he agrees that a lot of that, we might get this volatility really burst at the seam, volatility move, because something happens within the geopolitical. And that's what I think as well. We've got too much going on that I think that's really what could upset our apple cart and really just throw things like, okay, we're not going up anymore right now. The hell with interest rates. We're going down because of. So let's just kind of talk technical here. So here I'm believing that if we've got the 5 all the way up to the primary B being complete, then we're getting 1, 2, and then we have 1, 2. So the thing would be, if the market, and now we won't know for the cash market until Monday, but my thoughts would be that we gap lower. That would go for this count, because if we gap higher on Monday, then I have to look at what I'm now considering would be my alternate. And my alternate would be that, again, the 3 goes over here, the 4 comes down to here, and we still have one additional run back up. Now, if that's the case, I'm going to put a very initial fib together that will go along with that. And 618 is 52.87, which definitively would be a new high. And, maybe would not fill so much, because we would have to look at this as a 4, and this would still be a 1, 2, very likely. And then we got a 3, 4, and a 5. But if it all works out that you get a 5-wave rise and it's clean, and that's all we get, then that's our first line of defense in terms of where a high could be put in. It would be a new all-time high. It would be 52.87. It would still, now I got to put one more in. Let me just reinstate one additional that I need to stick in right there, and that is our irregular. So let me go over here, edit all of this out, and that's the only one that I got left that I can put in. And then you can see where that's going to be. Let me come back down, and let me go back down to my 4-hour chart, and let me reopen it. You can see 53.25 is where that primary B wave would be equal to 1.382 times the length of primary wave A. That's yet to be seen in the cash market. So there it sits. So again, if the highs have not been seen and the market gaps higher on Monday, the 4 is going to move over here and the 5 is then in effect still. And we've been looking for 52.87. 53.25 would be next beyond that. But the 100% is 53.75 basis the cash. And then again, we have minute wave 5, minor wave 5, intermediate wave C, primary wave B. So this has happened to me before where I'm like, okay, we're all done. And I will stack them up and put them on, only for the market the very next day or the next 2 days. No, we're not. Sorry. Here we go. We still got much more to go. But again, if it's happening again, it's much further into that finishing cycle, that finishing move. So I would consider that these levels would be pretty stiff based on a lot of stuff that's going on. So again, there's some things that were mentioned in this video by Brent from Spot Gamma, who he's talking about, we're in an election year. And I have to tell you, there are cycles. There are presidential election cycles. There's a 4-year cycle that is extremely dominant, and it has not peaked yet. So keep all of that in mind, because what could continue just to propel the market? Well, there are a lot of things, and a lot of them are technical, and a lot of them have to do with different factors that we don't necessarily include when we're counting Elliott. Cycles, though, as you know, I'm bringing in. So now that would be the alternate. Okay. Now I'm going to fill in the blanks if. So I got to take this guy back off. So let me just, in case you need to, I'm going to take them off. So if you need to, you can stop, reverse this a little bit, go back, and then copy those levels down. So I'm going to take that off. I'm going to take this guy off. And now we're going to put the fibs as if we're in 1, 2, 1, 2. So here we have, this is for this leg down. Now what are we measuring out? We're measuring out the minute third wave. Then I got to measure it against, because you see 1.618 is 51.27. Okay. But then maybe that's not going to be enough if this is, again, only 1, 2 within this minuet wave 3. That's not really going to fit, right? So there's 2 possibilities I got going on. I'm either going to move this up to minute degree, and these are minuet degree. Because if I start to break it down, you're not really looking for something that's going to be super big. But right now I'm going to leave it as is, but let's suffice it to say that it would be, we should be able to be re-entering in accordingly into a 3 of 3 move. Okay, a 3 of 3 move, and that should take us pretty quickly. So under this, I would not be expecting to see the market gap higher. I wouldn't really expect it to move much above 52.22, which is pretty much that's that high that we saw on Friday. I would look at to gap lower. Or if we start to move lower and then move sideways, waiting for the other for the Asian markets and then the European markets and then the US coming in again on Monday morning. But if we gap up, we know what the picture. If we gap down, then we're likely coming back into here. Now, where would I think for this third? Well, right now, 50-50, right there, 47.50. Now, here, we can add one more, and that would be down to here, and then up to there. Now, that one, also 1.618 for the subminuet, wave 3, that kind of comes in that same area, 50.42. And that might be more the ticket. And then we go up again, and then we come back down, and this would all be, one step lower. So if I had to, I can go over here and say, okay, what is that third wave? The third wave, or the third here would be 3.618, and that could be 49.67. So that all starts to fit if it starts to unfold, just so you can get the fibs in there. All right, so now I'm going to take those back off, and we're going to go on this, and we're going to go on this one. I'm going to take this one back off. Now, what I want to add is some additional work that's coming on a cycle basis, and also some levels that remain important, for the SPX. So as I talked about on Thursday, the SPX and the ES, for that matter, the S&P 500 did some significant intraday reversals there. So that started, as I mentioned on Thursday, it starts to send out a warning sign that a daily cycle peak, right? So that the monthly or even the daily, that it's peaked, and that part is done, and now we're going back down. So what do we need to see in terms of what's going to change this basis, the SPX? Well, it needs to push back above some minor resistance, which is important, but minor resistance, and that is that 52.05. So we're already there with the close, up to about 52.40. That would be one. Now, if we start to see continued decay in the market, it continues to go lower, and we get a close, not just a move, but a close below 51.79, which did happen on Thursday, but it closed back above it on Friday. So, you get a lot of stuff going on. One more thing that we need to see to get a violation of or just a negative shift in that daily cycle would be a break below 51.37. So that's kind of how I want to leave that. So the SPX would need to push above 52.05 to 52.40. I'm going to use 52.40. And again, would think if we gap, it's going to make it even stronger. And on the downside, that the market is going to find some minor support or intermediate degree minor support at 51.33 to 50.50. So we start to break, then we're right into those levels that I'm talking about here, down here, that 50.50 area. So that would all fit. So again, on the upside, we're looking for a break back above 50.44, 52.44. And then that's going to be, so again, we gap, then you're going to go to what I'm, back over to what the alternate would be, and that 4 is down here, and we're going back up, and likely going to head above 5,300 before all is said and done. If we start to break down, we have 51.37, which, we're looking at it breaking here and then continuing. And then it finds that support at 50.50-ish. Got a little bit of a window down there. And that, again, puts in that third wave. So that's the story for the SPX. Let's go over and take a look at the ES and see how that all is showing up. Same deal, right? I've left it in. There we have it. I actually took the rest down, but there I just put the minor 5, and then above that would be the intermediate wave C and the primary B wave as I left up on the SPX. Over here, so what I've marked here, and you can go out to my weekly chart, is if indeed the primary B wave is complete, this would be the picture coming off for a primary C wave. And what we're looking at is for the eventually to get itself below 3505. Well, wave C would be 1.618 times the length of wave A at 3220. 1 penny lower, right? 3220. That definitely would be there. It's not the end of the world. Yeah, it's a significant drop, but we're still above 3,000. So there's one other that kind of comes in at 29. I believe it's like 2980. And that is the measurement where I'm taking in all of cycle wave 3, and it's 0.382. Still comes in about 2980-ish. And that would be, if we broke that, and that would be for that much larger cycle 4th wave. So yes, significant drop. But it's not going to happen in a day. It's not going to happen in a month. It's not going to happen in 2 months. I would expect this to really continue to roll out for the balance of this year, if not into next year. And then complete cycle wave 4. And then we still have that very powerful additional economic expansion, economic growth in the form of a cycle 5th wave. Cycle wave 5 is not, it will resemble in some respects cycle wave 3, but not have the power of cycle wave 3, but still would have enough power to wherever this tops out, whether it's 53.33 or whether we're going to go up again in what I would consider my alternate right now, then it still would reach higher. We're going to go above all those levels once we're done with the cycle 4th wave. And when in cycle 5, it will go again and create brand new all-time new highs. Now, let's stick with the preferred that as I'm leaving it. And that's taking into consideration this, but we got that strong. And that was a reaction off of the employment report, the non-farm payrolls. Now, let me speak to that. I don't want to pontificate too much because I really want to stick to the technicals on this. But there were a tremendous amount of jobs created in last reading, and it was 300,000, and they weren't expecting more than I think 200 some odd thousand. So it was a significant increase. Now, yes, it's good news. I like it. People are going to work. People are finding jobs. People are able to pay their bills and support a family. That's good. That can never be a bad thing. So, but it's inflationary. So it puts pressure on whether the Fed really is going to be able to cut. Because now that that money is had, it goes into circulation. It goes in being used. So will that push inflation higher? Well, we're not seeing it come down on a consumer level. We're not seeing it come down at the food store, at the grocery store. We're not seeing it come down in terms of energy. And that's two levels that are really taken out pretty cleanly by the agencies that report these numbers of food and energy. Oh yeah, well, they're too volatile, so we're not going to include those. They're not really a good reading. Really? We all have to go and buy food. We all have to pay for energy. Why wouldn't you include that? Anyway, that's my 2 cents. So that what kind of can go into that would be it's a one-off thing, because again, I also think on Friday that we were dealing with Friday's expiration, and that then puts pressure as it did. Same way that did on Thursday to the downside. We get that same type of a move. It releases a lot of gamma, but now it's going in the other direction. So I think all of that. Now that that's all been released, let's see how the market wants to react tomorrow. So again, I go on the premise that the way that I'm counting this right now, I'm not expecting the market to gap higher. I'd be expecting the market to gap lower. Now, it could just open a little bit and then hang, waiting for what I'm not sure. Because what I'm really looking at is that it should come pretty much from the beginning of the Globex, that they're coming in and they're just going to start to get out again. So if we gap lower and then go like this, waiting for the other markets to see what goes on, that's one thing. If we gap higher, then I'm looking for pulling the 4 down, the 3 over to here, and we have one more run. Now, that's the case. If that's the case, let's go take a look at that. I'm going to go from here to here and then over to there. So what do we have? 53.14, not good enough. And we have 1.618 at 53.90. That would be the ticket. So what I do is, because wave 1 was not all that big, I'm going to edit it. And so those really are defective, and those are the two that are basically the one that is, then it's 53.90. So that would be for minute wave 5. And then we'll get other ones in between. Okay, so having said that, that's the alternate. If we start to gap lower, let's start to look at where our fibs are going to line up for a downside move. So we have that, and then we got one more that we can put in. It's got to be from there to there. Oops. Nope. I got to go from here to here. Come on. To here to here. Okay. So again, what we're looking at is minuet, sub-minuet. Sub-minuet's got a very big wave 1, so wave 3, I'd be looking for it to come below 51.55. So this 1618, I'm going to come back in, edit those properties. That's out, that's out, that's out. So let's go like that. Now let's put the realistic picture in. So again, taking out those upper levels for here. Now we've got this minuet wave 3, 2.618, 50.50. Imagine how that number is actually now for both the cash and for the future. Interesting. Now, where can this sub-minuet wave 3 come in? Maybe 50.83, 5100, somewhere in there, but below here. Right? I want it to be longer than that first wave. So anything, it's got to come in below 51.55. Could be 50.50 for all I know. So then but right away I'd be looking for maybe even below. And again, I'm looking for it. If it's going to come off, I'm looking for a repeat of this. They just start coming and they just start getting out, and then it goes. And it's going to take a little while. All right. So that is that. On the moving averages, what we got going on is got the 50 and I got the 200, and they've pretty much gotten flat. Responding to all data and movement was the daily 13 and the daily 20, and not even that much damage on that whole thing. Not that much damage was created. So what happened on the swing lower and then swing up, they are both flat now, along with everything else. But the 50 and the 200 both are still actually angling higher. That's in favor of the market continuing to go up, and the alternate count being the one that's in place. And that would suggest that that primary B wave has not been completed yet. All right, so that's where I am going to leave this now. I've gone over, same deal. I'm gone over the economic data that's going to come out next week. So the next update will be the Elliott wave update, and that will be on Monday, April the 8th.